Hello, hello, hello. Searching company. Okay. I think we have passed through the controls right? Because I can see the change presenter tab on the right of the screen. Yeah, you must continue. Okay. Okay, guys, can you hear me? Is the chat box the same for them? Sachin, I have turned all the above audience setting in the same button. Is the students replying on the same tab? Regular button? I can see the students, we have Neha, Pratik, Priya, and Shreya with us. Sachin, are the students' reply going to come on the same tab in which we are talking? Guys, can you type me a message, please? I will chat with you. Pratik, may have Priya next year. Can you please type hi in the chat with me? Let me know if I'm audible. Hello? हाँ मेरा लॉगिन हो चुका है। ठीक है। Hello guys, can you hear me? Yes, no? Okay, is the audio clear Neha? Okay, that's good. ठीक है, हो गया, मैं रखता हूँ। मैं समझ गया, क्वेश्चंस में आ रहा है, सब लिखा हुआ। ओके सचिन, थैंक यू, आई थिंक दिस विल वर्क। या ओके, हाँ मेरे ख्याल से हो गया रिजल्ट। ओके, थैंक यू। हाँ अगर ऐसा कुछ हो तो मैं आपको हम्म, ठीक है ठीक है ठीक है ठीक, थैंक यू। Okay, sorry for the delay guys. I think the audio is clear so we can start the session. I think you might be able to see my slide on your side. Just let me know if you can see the slide. It's working fine. Shall we start? Okay, my name is Satyadhar Joshi and I'll be talking about BAT today. Apologies for the delay that we had. Okay, probably we'll be doing a 3-hour session today starting from now, and we are going to look on how to give the BAT exam. I believe all of you are studying for the CFA level 1 or level 2, so you might be available, you might be knowing all of the things, but I'll take you through the exam strategy for the BAT. Okay, if we broadly divide the subjects that we see here, something that you need to understand at the very first is Bloomberg terminal, because I don't think you might have seen that. The second thing that you need to understand is how to read news from Bloomberg.com and understand the terminology, the graphs, and their format, and how to interpret those news to the studies that you have done in your CFA level 1 and level 2. And the third thing is, if you have not touched analytical reasoning ever, you should have a look at that. So we have 3 options to start with. We can check out the Bloomberg terminal, we can check out the news, or we can check out the analytical reasoning. Which do you think would suit best? Pratik, Priya, Neha, Pranav? Shall we start with Bloomberg terminal or analytical reasoning or Bloomberg news? Okay, we have 3 for terminal, so we'll start with Bloomberg terminal. You guys have any idea about Bloomberg terminal? Have you seen that before? Okay, Shreya, that's nice. Okay, so Bloomberg is one of the data providers that we have, and I'll show you a strategy to have a look at Bloomberg terminal from your end. So we have the ticker, if you might have heard about this term. The ticker is a short form for each of the security that we have on Bloomberg. Similar ways for the routers, we have the REC.
So we have two things, rake and ticker. On the bat, we type the ticker. We type whether it's equity, and we type whether we want the prices or whatever we are looking for. So I'll take you through an easy way to check out Bloomberg terminal at your end. So I'm going to take you through some terminal screenshots and the type of questions that we'll see on that. And you can repeat this exercise at your end. So if you go to images.google.com and search for Bloomberg terminal, you are going to get many screens. And you can get a little idea from those screens about how this works. Okay, before we start with the analysis of how to use, do you know the difference between price return and the total return? Ever heard about this term? Price return, total return, what's the difference between them? Okay, so total return includes dividend. Okay, that's nice. What would be the price return if we have a stock trading at 100 and they say that we are going to give a dividend of 10? Initial price from today's price. So suppose if today it's trading at 100 and 1 month before it gave a dividend of 10, so its price we are going to adjust from the back from today and move into back. So there might be stock dividends, there might be splits, there might be spin-offs. So depending upon what analysis we are doing, we have to adjust all these things. Okay, so most of the times they can trick you between total return and price return. The total return is always greater than the price return because the total return includes dividend or splits or anything. The default screen that you see on the Bloomberg do all these adjustments and give you a total return picture. A simple example is that suppose a stock is trading at 90 today, it gave a dividend of 10 1 month ago, everything is done. So what was your return if you invested in stock like 6 months before? And so you might have, and we are given the price of the stock that time. So we might be given raw prices and we might be asked to find out total return, and we have to adjust all those things. So we can do that with splits and with dividend. The problem comes when we apply both of them. Okay, that was it. Let's move to the Bloomberg terminal. Okay, the only trick here in the Bloomberg terminal is about the adjustments. So they could do things with the closing price, they could do things with the mid price, they could do things with the average of opening and close, and they'll give you all, and they'll ask you one of them or to apply one of these things. So you have to pick that thing and apply that. So on the screen you see we have got the change, we have got the bid, ask, opening high, closing high, 52 weeks high, 52 weeks low, return till date, that's 16.53%. Market capitalization and beta. Okay. So okay. So this is it. Let's check out a few more. Okay, so this is the description. Now to get here, we generally type the ticker, then we type equity, then we type DES. If you can see the DES on the left side of the screen, that is for description. So most of the times you will get a screen of Bloomberg terminal and you have to pick data from there. It's the same as we get in the exam, but this time you'll have a lot of data and you have to pick the right data. So for example, this is the description of Morgan Stanley. The ticker for Morgan Stanley is MS, which is given here. They have given us the rating. These identifiers are again same as ticker. So if there is a conflict of ticker, we can use So this is a small tutorial. I think it's available freely on internet. If you don't get it, you can email me and I'll send you these files. Anything that you would like to know about the Bloomberg terminal? Any question that comes into your mind? We use Bloomberg terminal to get data. It makes our life easy. You can import things on Excel. If you right click on the screenshots of the pricing, you get an option to import it in the form of Excel. You can take a grab of the screen. You can email a screen directly to your email. So there is nothing much complex about the terminal. So whatever information you want to know, you can get it from here. The only trick here in Bloomberg terminal is the adjustment. So you have to be careful about that. And the most important thing, as I told you, the questions that you might get is on the adjustment for the corporate events. Okay, so there are a few things which we can look at. Suppose if a company's stock is trading at $100 and it announces a dividend of 25, theoretically the price comes to 75, right? Now if you look backward, you might see that stock price, the raw price is today 75 and before it was 100 if you don't discount the dividend. So you add the 25 to today's price. And similarly, you might have spin-offs, you might have merger. The easiest way to do adjustment in real life is use the money and buy the same stock again. Have you heard about share buyback and the importance of share buyback? Anybody? Okay, so if suppose a company stock is trading at 100 and they decide to give 10 as dividend, and the stock price comes to 90, then the most ideal thing with index managers do is that they use that $10 and buy company stock. So they'll buy 0.0, I think 0.09 of the company's stock, such that the total stocks that you have will increase. So that's one way to adjust. So if you are running an index where you have many stocks, the companies keep on giving dividend, but you have to give the total return to the person who has that index, then you'll keep on buying the company's stock from the money you get as dividend, so that you show the exact return. Otherwise, investing it or keeping it, you are not truly reflecting the performance of the company. Because if you're keeping it as a risk-free rate, a part of it, it becomes a portfolio, like you have an equity and you have a risk-free component attached to it. So we generally buy the same stock from the dividends that we get. So our stocks would increase. So we'll multiply today's price into the number of increased stock that we did due to buyback, and we'll use that as a reference frame. Okay, so if a company's stock was trading 100 a month ago or 6 months ago, it gave a dividend of 10. So we got 10 and the company's stock price fell to 90. So we can buy 0.09 stocks, I think, of the company. So our final shares would be 1.09 of the price 90. So 1.09 into 90 is the money approximately that we have with us. So anybody who would have invested 100 in that company is having 1.09 into 90. That's one way to do it. Do you get the idea about this? I don't know where to move to the blank screen. Just hold on. Okay. I think I missed the message. Shreya, can you type that back? So a company might do new offerings, new equity offerings that would dilute and bring down the prices. So we would be in the reference frame of the company and follow it to truly reflect what our investment is moving into. So that's about the corporate events. Most of the time Bloomberg terminal is used to understand when these corporate events would happen, how to adjust our prices, because all the prices would work in raw format. And the other part of the Bloomberg terminal is to find the market cap of the company. I don't know if we have something here. Okay. So they have given us a list of where we would find things. It's quite easy. Just don't get daunted when you see the Bloomberg terminal. It's quite intuitive. You have to pick the right data. The only trick here would be adjustments. They might give you raw prices and they might give you adjusted prices. They might give you different points, and they might give you raw prices and they might give you the adjustments in words. So you have to do the small adjustments yourself. Okay, I think that would do it for the terminal part. Any doubts in the terminal thing? Anything that worries you about the Bloomberg terminal? Anything that you are afraid about it? No, you don't need to know the specific commands. They are going to trick you most of the times in adjustments. You need to know enterprise value because that is the most important part in investment banking. And simpler things like beta calculation which they are using. Now they might trick you in a way that they can take closing prices or average prices or whatever. They might give you 2-3 things and they might ask you to pick the right thing. So be very careful about choosing the excess or choosing your reference. You don't need to know any command. Okay, one more thing. Okay, I'll email you some of my recordings on Bloomberg terminal to watch out. So I'll give you the link at the end of this session. Okay, a related topic to this is understanding and reading news at Bloomberg. That becomes very important. Have you heard about chart of the day? Or have you ever went to the Bloomberg website? So I'll take you through what is called the chart of the day at Bloomberg. So Bloomberg chart of the day is a chart of something interesting that's going on. And most of the time they ask you the reasons, the interpretation of what's going on. So this is one chart that reflects something interesting. Can you tell me what's interesting in this chart? Most interesting part, anything that's weird that you might notice? Sometimes you require a little bit of pre-knowledge, but you can guess that. So US is in a troubled time, and the biggest debt after the mortgage debt and credit card debt is the student loan, and you cannot file a bankruptcy in student loan, which you can do in other loans. So if student loans become worse and students cannot say that I'm bankrupt, I'm never going to pay it back, it creates a great burden. So this is the chart of the day. Now Bloomberg publishes chart of the day I think once every day, and they talk about something interesting, some big news. It's like the main news of the day. So the biggest concern in US economy as this chart of the day is the student loan. So it would be taken verbatim from Bloomberg the chart of the day thing, and they would create some of the questions. Like, what would be the impact of this delinquency on the economy of US? Which of the following is supported by the author, or which of the following is refuted, or which of them is not given, or something like that. So let's understand how to look this chart of the day from Bloomberg website. Yeah, in case you need any help about the terminal, just let me know. I'll give you some links about my recorded classes on terminal. I'm going a little bit fast here because we have to cover a lot of topics. So if you Google Bloomberg chart of the day, you'll get many charts. If you have used Google advanced search, you can go here. You can go to any time. You can say that I want the results of past week. So you will get a chart which will have something interesting. I don't know about this one. This is a random thing. So this would be the chart. There would be a small video attached to it. It might talk about something that's happening. And you have to get it. I'll email you the presentations of the chart of the day so that you can do 2 questions which I made from the charts. Any questions about the chart of the day? Anything that fears you, you know? So before the exam, just try to look at some chart of the day, just try to go through them, just understand the language and the way in which they are writing. A few things that you need to know today is that the unemployment rate is at a 4-time or a 5-year low. The S&P is at the same levels as it was before the recession. The biggest concern is in US is the student loan thing. The mortgage-backed security market is still doing okay. It's still AAA rated and giving good yields. The interest rates are very low at this moment. So these are few things that you need to know as a pre-knowledge when you read the chart of the day. Okay guys, any question on this? Would you like to check out one or more chart of the day? Let me know which one to pick and we'll try to check one of them. Or give me a topic that you want to see on the chart of the day and we'll check a chart of the day on that topic. Anything that comes into your mind? Okay. Let's see if we have something here. I think it's not a chart of the day, it's a news, but yeah, it's a news. Okay, look here, this is one of the news that I've been talking, that US stock market is at a 5-year high, unemployment is at a 5-year low, interest rate is very low, so most of the time. The other chart of the day, very famous, is on China. China is buying huge reserves of gold. China's economy is doing okay, neither going up nor going down. China has high inflation rate, and they are building. When I gave the exam, I got a reading comprehension which said that the countries which build the longest tower in the world are moves toward recession. So they give an example of, I think, Saudi Arabia or Dubai, and of China, and they say that China might come down because they are building the tallest building, something like that. They like these topics, China and something very big, which talks about a big surge in the global market. I don't know about this bailout thing, but yes, you can search chart of the day on that. So two topics to look at: news about US and news about China. Most of the times you will get chart of the day on these topics, which you can yourself see on the screen. Just make a note of this. Just try to read 5-10 chart of the day. Just try to understand what they are talking. So this is a performance. It's quite interesting. Whenever we have a recession in US, we try to observe the recovery, and there is a chance of double dip recession, which comes out when we are recovering from the recession. I think here they have tried to compare the recovery, and they say that the recovery is nearly like the biggest gain. If you observe the recession time period from 1982 to 1986, 1990 to 1994, so the biggest gain after the recession. So if there is a recession and you buy something and you exit at this point, they are comparing this with the bull that we had in the recession times. What might be the reasons for that? Did we have any war? And there might be other reasons attached to it. Maybe, I don't know, Vietnam War, which time. So things like that they'll give, and they'll ask you that what's the reason for this recovery, or is that something weird? Most of the times their intention is to understand investment decisions and trading decisions that you might take using this information. So just try to be on the seat of a trader or an investment manager with a horizon of 2 to 5 years or longer, or with a trader who has a bet placed for a day or a week. So those are the two time frames that you should sit in and observe these things. Like if they are saying that this is the biggest recovery and the market would come down because the earlier times the market rose 120 times or 140 times out of the recession, and then it peaked out and then it came down. So they are trying to link all the recessions, and they might say that the market is at maximum now because it happened the same in 1982 to 86 period, in which the market went 120% and then came down. So this might be the right time to short the S&P, because the chances that it's going to recover more is very less, because if we observe the last two recoveries that we had. So they are trying to give this message to us: as a long-term investment, you should short S&P or something like that. Okay, are you getting the idea, the reasons behind the chart of the day, and how the questions would be framed, and how to sit in the reference frame of a trader and an investment manager? Any doubts on this topic, this chart of the day? Anything that you don't understand in this chart of the day or the earlier one? Prateek, Shreya, Pranav, Neha, and who else we have? Shall we move ahead, guys? Is this chart of the day thing clear? Yes, no? Okay, so make a habit to go to Bloomberg.com and read some of the chart of the day or some other news. You'll find it interesting. So I gave you a strategy on how to check the Bloomberg terminal. You can go to images.google.com, search the Bloomberg terminal, observe the images just to get familiar with that format which has the black background and the words written in red. The questions in the Bloomberg terminal would be based on adjustments, would be based on picking the right data and corporate events. That's something that you will see more often. In the chart of the day, you have chart of the day published by Bloomberg which talks about some big event or some indication on how to take an investment strategy from here. Let's try to understand this interpreting the news part so that you can apply all what we have been studying. Shall we move ahead? Anything that you would like to ask? Pratik, Priyan, Shreya, Pranav, Neha. Just let me know which news are you reading, anything that comes into your mind. Did you read any news in the last 1 month that you think is very interesting or which you don't understand why that has happened? I did not read this Cyprus credit crunch, so I'm not aware much about that. Okay, let's try to see how to systematically read news for Bloomberg assessment test. So when we read the news on the newspaper, they try to pick up something which is like sensational. I'll take you through with a strategy to read news from Bloomberg in a more systematic way. Okay, so if you look at the type of questions that we have in BAT, you can divide the entire news section into 4 parts. The first part is the banking risk, the implementation of Basel norms, the sovereign debt of the various companies, those kind of things that you should know a little bit. If you were to read news, then try to search for these 4 major areas. Then we have the market and trading, how to take decisions like we had a look at the S&P index and they tried to compare it with the recoveries of the earlier recessions. Something which relates to trading and market, in which direction the market is moving. Where would gold go from here? They'll give some analysis of gold. They'll try to link it with the past recessions or something like that. Then they have the fixed income, the mortgage-backed securities. Can anybody tell me any hint about what's the value of the total market-backed securities in US market? Why is it very important? What's the total amount of MBS that's floating into the US market or US-backed mortgage-backed securities? Any idea? Why MBS is so important for us today? And why we get so many questions on MBS? One thing is that it was one of the reasons of recession of 2008. Pranav, Shreya, any idea about what's the volume of MBS in US market? Have you seen the debt counter or the debt clock of US? Okay, it's very interesting because it will open your eyes to most of the things that we are talking. Let me take you there. see the US debt clock on the screen? No, these are some big money that's floating into the market, and a disruption in one of them could cause weird things. Now I talked about student debt because it's I think the second biggest debt. Can you pick me the student debt from the screen? Can you type it on your screen? Pranav, Neha, can you pick the student debt from this screen, and can you rank student debt on the types of personal debt that we have in US? Am I missing something or nobody is typing? Yes, it's 975 billion, the student debt. And can you tell me the mortgage debt? Why is mortgage news very important? Because the amount of mortgage debt is okay. To simplify, it's 13 trillion. Do you know the approximate economy of US and India in terms of scale? I'm not an economist, but just to compare it, I think US economy is around 13 to 15 trillion, somewhere that size, and our economy is 1.8 to 2 trillion. So any disruption in this mortgage debt can cause chaos. That's why mortgage debt is very much important, and they track mortgage debt. What's interesting about mortgage debt? Why is it so much interesting? How is financial engineering used in mortgage debt? Okay, have you heard this term alchemy? Can you make gold by mixing copper with iron? Or can you make gold by mixing any two elements together? And what is gold in terms of finance? Gold means something which is something which has some value for sure, and something which is the best in terms of fixed income or fixed income security is something which is AAA rated, right? Oops, my plugin crashed. So interesting thing about the mortgage debt is that you can combine various mortgage debt, you can securitize them, and you can create tranches of AAA rated, triple B rated, or whichever thing you want based on some parameters. So you are bringing some loans which you are not sure of. Many of the times they were very bad loans, and you mix them, you do some financial engineering, and you create a AAA bond based on buying some credit default swap or doing some adjustment. You might have read all of these in fixed income CFA level 2. So out of these mortgage debt, which is 13 trillion, they have created AAA securities, triple B securities, AA securities. That's why news about this debt is very important. That's why when you look at the news section, we have, oops, in fixed income, we see MBS as the major chunk. So you need to know a little bit about news in MBS. That would help you to actually know the type of question that they are going to ask you. And the next interesting thing is credit default swap. It's also called a derivative of a derivative. And then we have the hedge fund and private equity section, which is a part of alternative incomes. So if you are a hedge fund manager or private equity, if you're managing a big portfolio, you need to have a look at all of these things. And these are the 4 sections of the news that we are going to look at. I'm going to go to Bloomberg.com. I'm going to show you how to track these sections. So fixed income, 2 types. In sovereign debt, we can have municipal bonds. You might have read about these things, bonds in general. You can go to GARP website and read about risk news. And most of the investments of US are coming into emerging markets because we have high growth here. And then we have the market news, which talks about where S&P is going and things like that. So keywords to look for: MBS, CDS. Let's try to understand how to do that at Bloomberg. Any questions on this debt clock or the news part in general? Anything that worries you? Okay, I missed you, Neha. Financial engineering means that you find out the probability of default, you create those tranches in MBS, and you buy credit default swap on that tranche. So if the person is not going to give the loan back, you have a CDS with an insurance company or with some other person who is taking a bet on this. So you find out the probability of default using various methods. You find out the prepayment mechanism, and you create AAA, double A securities from the same group of loans. So ideally, if you look at corporate bonds, the rating most of the times depend on like their interest coverage ratio, the debt to equity, and other parameters. Have you read about how to value corporate bonds? You might have general idea that interest coverage ratio, debt to equity, free cash flows, things like that. So you cannot create a AAA bond from air. Yes, in case the issuer defaults, in case somebody is not paying the loan, the CDS will come into play. So you can create a AAA instrument by buying various instruments. To find out the pricing of those instruments, you do complex mathematical modeling, which includes modeling of default. There is a book of from a person who invented this, copula, which finds out the probability of default and its relation with various parameters. So you do all those mathematical calculations and you create a AAA bond. It's like alchemy. I told you this term, creating gold out of some other chemicals. So you cannot create a AAA bond of a company which does not satisfy a rating. So you are combining various things, and as per what the rating agencies want. So rating agencies say that I'll allow only people with property value to loan value to be 2 times or something like that. Only persons with loan less than 50% of the property value should be used in AAA rated MBS. Only persons whose credit rating is greater than 680 or 700 or whatever they have decided. If it's not there, then you can buy a credit default swap. You can create tranches that if they're not going to pay money, you will get money from some other place. So you mix all these things, and that's how, using financial engineering, using all those mathematical model, you can sell different bonds. Is the whole idea clear? Why MBS is important? What kind of news are we looking at here? Anything that you want to ask? Neha, Shreya, Pranav, Prateek? Shall we proceed with the news section? Okay. So as you can see on the screen, the news sections are divided into, most of the times, markets. The markets could be commodity, it could be gold, silver, oil, investing in currency. Do you know that yen, I think, depreciated 10% against dollar? Rupee also depreciated against dollar. And these kind of things. You might have heard cross currency arbitrage. Are you aware about this term? Cross currency arbitrage. Shreya, have you heard this term, Pranav? Cross currency arbitrage. It was in economics CFA level 2 if you have read about that. Okay. So there is a strategy in currency which is very famous, which is called the forward bias. Most of the times people are betting on this index or this strategy. So this strategy says that the currency is going to depreciate. The economist or the theoretical point of view says that the currency is going to depreciate of a country which has high inflation, high interest rate. Right? If India is having high interest rate, if India is having high inflation, then our currency is going to get weaker. Right? Are we all agreeing to this point? Theoretically, we have used those formulas of inflation, of interest rate. Have you done those type of questions? If the interest rate is in India is 8%, if it's 1% in US, if today's rate is 50 rupees for 1 USD, what would be the future rate? Just let me know. These are the two typical questions that we get. So just look here. If we are standing in 2012 and we want to buy a forward of 2013. Okay, we looked at a forward value. If today 1 USD is equal to 50 INR, interest rate of India is 8% and interest rate in US is 1%. If we look at forward rate, people are saying that India is going bad and Indian currency is going to depreciate a lot. So suppose your friend comes and say to you that he is in a mood to bet, and he says that the Indian rupee will go to 45. So if he says something like this, he says that this is the rate that I can give you. Now, can you create money out of thin air in this system, risk-free profit? Yes, no, if yes, how? Are you getting my question? There comes a friend or agency that says that after 1 year, okay, rupee will get strong. Sorry, he says rupee will get strong because there are high chances that Narendra Modi will become Prime Minister of India or something like that. And he says that I can give you this rate after 1 year. So can you create money from thin air if you have an instrument available somewhere like this? So you got my question, Shreya, Pranav, Neha? Yes, no, do you want me to repeat it? Okay, Abhinav, welcome to the session. Abhinav, Neha, Pranav, Prateek, Priyan, and Shreya. Were you able to understand my question? There is some guy from politics. He does not know finance, but he wants to bet. He comes to you and he said that this is what I am betting. Now, can you create risk-free profit using this quote? Just give me a yes or a no so that I can move ahead and help and give you more hints. Okay, 8% is the interest rate in India, 1% is the interest rate in US. Current exchange rate is 50. The person who is from politics who does not know finance is betting that he'll give you 45. He'll give you 45 rupees per dollar or whatever. He's ready to play this game. Now, can you create a risk-free profit from this where you have no risk? You'll create money just this instant and you'll exit the bet. Means money from thin air. And how much money can you create from thin air with this instrument? Just at this moment, all your risk will evade and you will get money right away. Pranav, Neha, were you able to understand this question? Do you want me to repeat? I'm just creating some background to understand currency news and the kind of idea that you need to get. Yes, we are looking for arbitrage position. Can you tell me if there is an arbitrage position and what's the money that we can get from thin air if we have a scenario like this? Shreya, would you like to have a shot at this? Can you give me some idea about how we'll move ahead with this question? Assuming that we can deposit and take loan very easily in US today, and we can convert the money at $1.50 at this quote. These are the assumptions. So today we are offered a rate of 50. After 1 year we are offered a rate of 45. So what we'll do here, let me show you. So what our analysis says that if we deposit 50 rupees in India, we'll get an interest of 8%. If we borrow 50 rupees from India, we have to pay an interest of 8%. And same in US, depositing and borrowing both cost 1%. According to economics, Indian currency should depreciate, but keeping theories apart, we are looking for earning money at this instant. Okay, so let's calculate the price, the theoretical price, what it should look like. Have you read this in the economics? Okay, just look at this strategy. Just be careful here. If I am sitting in India, if I take a loan from US of $1, okay, I get a $50, I get 50 rupees instantly, right? So if I take a loan of $1 in US, I have to pay 1 cent after 1 year. So this is the money that I have to pay after 1 year. That's $1.01. I got 50 rupees today. So I deposited it in an Indian bank. And after 1 year, I got 54 out of that. Right? Now this guy was selling me $1 for 45 after 1 year. He was saying that whatever the political reasons, India is going stronger. So I'll buy this $1 from him at 45, and 1 cent would be very small, 45 point something. So I'll get this $1.1 from 46, return it back here, and I just created a riskless profit of ₹8. At this instant, I don't have any risk. So this is the 8 rupees I created from thin air just because of a mispriced instrument, or somebody who was not knowing finance was just trying to bet in. Okay, do you get this, or you want me to repeat? Shreya, Pranav, Neha, who else is with us? Prateek, Priyan, are you with us? Oh, it's not like triangular arbitrage. Triangular arbitrage happens when the exchange rates are different at this moment. So if, let me show you that. Before that, just let me know if this one is clear. Yeah, mine too. My connection is also slow. Okay, let me repeat this one from the beginning. Just be with me. If we stand in a reference frame of 2012, and 2013 is the future, 1 year later, we don't know what's going to happen. But some person who is smart enough, he comes to us and he say that I'm taking a bet that India is getting stronger, our politics is getting good, there are good chances that we'll get a very good government next year or whatever, and a rupee will strengthen, and I'm ready to take a bet at $1 at 45. I want to get into this bet. And he does not know about any financial instrument. So he says that, are you going to bet me at this instrument? But we know that the prices are carried away due to arbitrage and due to some mechanism. So we say that, okay, we are ready to take a bet. We'll buy $1 from you at 45. We'll give you 45 and we'll get $1 from you. And he is happy. So we get into a forward contract with this guy, which he was selling, that we'll buy $1 in ₹45. Okay, we made this thing. We signed this contract. Now at the same time, we took a loan from US of $1. We got 50 rupees. We deposited it into the bank, Indian bank, which is giving 8% return. After 1 year, we got 54, which is 8% of 50 plus 50. Now we came back to this guy who has signed a contract with us. So we gave him 45 rupees or a little more because we had to pay 1 cent interest. We gave him 46 rupees. We purchased the dollar. We returned it to the US bank and we are left with 8 rupees. So we don't have any risk. We just signed two contracts, contract 1, contract 2, and we created a profit of 8 rupees. We don't have any risk now. Everything is on paper. Whatever happens, we are still earning money. We earn money from thin air. Is the example clear, Pranav, Shreya, Neha? Who else is with us? Okay, just quickly understand this model. If you just let me know if this is clear, because I'm going to talk about a very interesting strategy that they are taking on currency. Pranav, is this clear? Do you want me to repeat? Prateek, do you want me to repeat this one? Yes, no? Shall we move ahead and move to the next level of complexity for the same question? Was this explanation clear on how we earn money from a naive person who was betting on a direction and we earn riskless profit? If you have any doubts, just type in the window. I think it's in CFA level 2 as well. I'm not sure about this one. Was this unclear, Neha? Do you want me to repeat? Okay. So let's do another interesting thing. Now, do you know about the exchange rate of USD INR in year 2000 and year 2010 or year 2011? Any guesses? Any guess? Wild guess. The rates of 2000 and 2010 for USD INR exchange. Okay, so in 2010 and 2000, it was just hovering around 43, 45, 47, things like that. It was always moving around this range. It was not depreciating, despite the fact that India had 8% interest and US had 1 or 2 or very less. We had high inflation, we had high interest rate, but still our currency was not depreciating. So if you observed this phenomena, then all those persons who were taking a position that Indian rupee is not going to depreciate actually earned money. And they earned money because there were people who were taking the opposite position. So if you say today that you are ready to buy INR at 54 again after 1 year, whereas the risk-free arbitrage fee price is 57, so you're still going to get money. So there are indexes on this which writes forward on the currencies which they think are not going to depreciate based on some strategies. So there is an index which is called the forward bias index, which hedge funds buy, which says that forward prices are not the true reflection. So the market will write a forward to those currencies which we don't think are going to depreciate, and we'll take a position on this one. So if they say that yuan is not going to depreciate because China has already manipulated its currency, then they have this index which is called the forward bias index. So for that, to understand which currency is going to depreciate and which is not, that section of news becomes very important. So let's get there and understand how this works. This is one easy question that you can get: cross-currency arbitrage and how to earn money from forward instantaneously. So currency news become very important. Two currencies which I saw the questions that you can get is yuan, which depreciated by around 10%. Indian rupee also depreciated a lot, and Argentina also. Now, if Indian rupee is going to depreciate against US dollars, it's also going to depreciate against euro, assuming the fact that US dollar and euro are at a fixed rate. And can you understand this point of why that would happen? Let me repeat the question for you. If Indian currency depreciate against US dollar, will it also depreciate against the euro? Yes, no. Assuming that US dollar and euro have constant exchange rate for the entire period. And this is where cross currency arbitrage come into play. Shreya, Neha, Pranav, Priyan, were you able to understand my question? Just let me know if you got it or you want me to repeat it. Okay, it would affect. Shreya, Neha, Pranav, Priyan, what's your take on this one? Can it just happen like everybody wants to go to US? You are taking education loan in US, whatever you are doing, and you are just buying US and US and US. Everybody is buying dollar. Indian currency is destroyed due to dollar. Then would it affect our exchange rate with euro? Although we are exporting good things to Europe, or we had a very good contract with France and Germany to export good things, something like that. So everything is going good with euro. Our exports are increasing, but our exports to US are deteriorating. We are importing a lot from US. So can it happen that our currency would just depreciate against US dollar and it would not affect our rate with Europe? Can that happen? Yes, no? Can it happen such that our currency would depreciate only against US dollar and not against any currency, assuming US rate, US with euro is constant, because they are not having any issues with them. Everything is similar with them. Okay, so can you give me an example? Suppose 1 USD is equal to 50. So this is something 1 USD, sorry, I'm giving you rates close to real. 1 euro is equal to 1.5 USD. And 1 euro Okay, let's understand how to do these questions and why this become very important, because most of our bet would say that our currency would depreciate against one currency, but the cross currency arbitrage will not let that happen, so we'll take a position on that. Suppose 1 USD is equal to 50 rupees. That's the exchange rate today. I'm taking 50 because it would make our life easy. Okay. And we have 1 euro is equal to 75. Suppose 1 USD, sorry for the poor handwriting, becomes 60. What would our rate with euro become? Would it remain to 75? If it's changing, what would it change to? And if you have some statistic about exports, imports, how can you earn money with this idea? Is the question clear? Sorry for the poor handwriting. Okay, so you say 90. Shreya, Neha, what do you say about this question? Oh no, there are two things to it. One is the news on export import, and other is the rates in market. So rates in market are governed by arbitrage positions. So whatever the export import is, any price movement beyond arbitrage price would make those computer algorithms pick in profit. So this happened. Now what would the algorithm do? What's the correct pricing that the algorithm will take here, beyond which the algorithm will earn you free profit? So we got one answer from Priya, which is 90, that €1 should cost 90. Let me make things easy for you. Suppose €1 still cost 80. Can you earn money from thin air? If something like this is happening, and let me make it easy for you, and you can get €1 in 1.5 USD, and it was same as before, €1 from 1.5 USD. Okay, now it's quite clear. Yes, so that's the pricing. If it's not happening, then we can earn money from thin air. So how will we take money, we'll earn money from thin air, Neha? Can you expand on this? What will we do in scenario B to earn money from thin air? Which currency would we buy? Which currency would we sell? What will we do in condition B if we have a scenario like this? 1 USD is equal to 60, €1 equal to 80, and €1 is equal to 1.5 USD. So were you able to pick this one? Neha's answer? You want me to repeat this one? Even if you don't get this one, just come to the next part because it will help you to understand the first part. Okay, you'll buy €1 with INR. So you'll spend 80 rupees. You'll get €1. Then you will buy dollar. So you'll get $1.5. So you'll sell that $1.5, and you will get 90 rupees out of that. So you earned 10 rupees risk-free profit. So you created 10 rupees from thin air without taking any risk. The algorithm did that for you. Yes, take the dollar. Step 2. Step 1, buy euro. Step 2, buy dollar from that euro. Step 3, sell that dollar. Oh no, I am missing some messages, Shreya. I don't know. Sorry for that. So you can earn ₹10 as risk-free profit if something like this is happening in the market. And something like this would happen because the prices instantaneously are governed by supply and demand. So the banks would earn by their algorithm risk-less profit all the time, because due to bid-ask spread, the prices are moved in one direction. So they can play cross-currency arbitrage each second. So if the risk arbitrage free price is 90 and it moved to 91 due to some demand or supply game, or it moved to 89, the bank get the chance to earn risk-free profit. Oh, was this question clear? So this is the reason why we are going to move in and understand the currency news and find out the reasons why currency would depreciate, what happened with Japan such that its currency depreciated by 10%, what are the scenarios that would affect the INR and dollar rates. Just a little guess, what would happen if we would not have allowed Walmart to come into India? Would the currency go better, or it would have depreciated? What would have happened if we did not allow Walmart to come into India? What would that do to our exchange rate? And this is a news article that you can get, that the current exchange rate is 46, Indian Parliament disallowed Walmart to come into India. What would happen? Yes, it would. Yes, Indian currency would appreciate if we allow Walmart, and it would depreciate if we disallow Walmart. So what is the reason for that? Any guess or any reason? Yes, inflow and outflow of US dollar. So that's supply and demand. So that's one game. Now you could have, if you know, if you knew, if you can take any bet from the few on this one, you will get the forward prices from market. So if you are for sure that the Walmart is coming, then you are sure that Indian currency is going to appreciate, which means that you can still buy Indian currency at 54 or 53, although the risk-free or the arbitrage-free pricing would have been 57 or 58. So you would have sold that forward and you would have earned money. Or you would have sold a forward that you will give somebody $1 at 57, which was the risk-free profit before this decision was made. Okay. Was this example clear on how news would affect the currency and how the currencies are related to one another? Okay. So that was a very interesting part on the currency. Similarly, you have Basel norms. So you must be knowing that if we allow Basel norms, the banks would have to require more capital, so the leverage would decrease. So it would impact the GDP and the profits of the bank, and the bank would be in a position to give less loans. So you need to have a little idea about this concept. Hello, Abhinav, are you with me? Can you please transfer the controls back to me? Hello, hello, hello. Hello, hello, hello. हेलो सचिन, इसने मुझे वापस बाहर फेंक दिया. आप मुझे वापस राइट्स दे दोगे प्लीज? जी, थैंक यू. हम्म हम्म. ओके. Sorry for the disruption, guys. This system is terrible. Hello, can you hear me? I don't know about this moment. Pranav, Shreya, Neha. Okay. So let's check out the Bloomberg news section and understand how to use all the concepts that we have been reading and make investment decision on the news that are there. Okay, first news. What would happen if we increase the austerity? If Greece agrees to, do all those kind of austerity measures, what would happen? Would it currently appreciate or depreciate? Question one. Just give me a quick answer so that I can link all those news and understand. Give me reasons as well. So implications of austerity measures on a country, say suppose Greece or UK. What would that do? Okay, austerity means that the country will force them to save. It will not give them the free lunches. The government will not invest in the healthcare as much, and the unemployment compensation would become less. So it would keep the debt in check, yes. So what would that do with the currency? Quickly guys, just give me anything that comes into your mind and we can take it from there. Effect of austerity on the exchange rate. So austerity means government spending would decrease, the government's debt would decrease. So the currency will become stronger. Yes. Okay, so what would happen if the interest rate decrease of a country? Would its currency appreciate or depreciate? So Australia cut down its interest rate. So what would that do? Which is the news item 4 on your screen. Just give me anything that comes into your mind. Whether it be wrong or right, we can look at that. What's the first thought? You know, you have got just 2-3 seconds to click the button and make a trade out of it. Okay, just, yeah. So the Australia dollar would depreciate, but, oh, you cannot see the screen share? Neha, Pranav. Who else is not able to see my screen? Just let me know. Priyan, are you with us? Can you see the screen? Okay, just let me check this. Yeah, sorry. Showing screen. Okay, can you see the screen now? Which has got 4 news on the currency part. Shreya? Okay, just resolve that issue. Yes, Australian trades are 7-week high. So theoretically, there are many things that might happen but will not happen. So I told you that the interest rate, we looked at an example of the effect of Walmart. So the Australian dollar was trading high because the interest rate cut would increase the money in the market, and it would work as a stimulus. Okay, so they might have their reason, and most of the times, you know, 90% of times they'll try to contradict what should happen. Let me give you another example. Let me give you another example, which is very interesting, which came into my exam. They said to me in the exam that if the US does quantitative easing, it's causing global inflation. That was the question when I gave the exam. Yeah, that's one of the reasons, Shreya. It might attract foreign capital. It might stimulate the economy, so the exports would increase. So those kind of reasons. The question that they asked me in the exam was that we have studied that if we are, just hold on for some second. Sorry, I'm back. So they asked me that US is printing dollar. That dollar is being invested in India, right? If US is printing dollar, everybody in US is getting dollar. That dollar is being invested in India, which means that the dollar inflow in India is increasing. They are bringing dollars inside India, but that's causing inflation in India, which is strange. So how is that happening? So most of the time, the questions would contradict what you have studied in theory because of practical reasons, because that thing actually happened. So any guess on this one? Let me repeat the question. US is printing dollar due to quantitative easing. US hedge funds, US investment banks, US portfolio managers are getting dollar. Those dollars are being invested in India because India is the emerging country, stable country, and which would mean that inflation would come down in India. But Indian inflation is increasing. The money supply in India is increasing. How's that happening? Any guess? Priyan, Shreya, Neha, were you able to understand my question? We have studied that if more people are going to invest in India, that's better for us. How is that related to inflation? And this is a similar type of question which is contradicting what we have studied in the theory. Yes, excess money supply is the reason. So, when US dollar is coming in India, suppose the current rate is 54 we have today, and suppose US keeps on pumping US dollar in us such that if the government does not do anything, that would go down to 48, 47 or 45, the exchange rate. This would kill our exporters. So what the government will do is that government will try to stop this happening at a very rapid rate. Firstly, they'll stop it at 50 or 52. Secondly, they'll not let this happen at a very fast rate. So they'll try to print money and give it to US, but they'll not try, they'll stop US from draining the rupees from the market, which would in fact affect the rate. So if the government does not intervene and the US keep on pumping US dollar into our economy, then the US dollar would depreciate, our currency would appreciate to a level which we cannot sustain. The exports would die out, and this would happen in a rapid way. So nobody will get a chance to actually get his hedges. So what the government will do is that government will print them and give them money rather than allowing them to suck the money from the market. So this would increase the supply. Now this would not happen under normal scenario, but this was the catch there. So most of the time the questions would talk something which happened in real life but which was not supported by theory, and you have to search for the reasons. Okay, was this example clear? Pranav, Shreya, Priyen, Neha, that why our theory that we studied in the book went wrong and some reverse phenomena happened? Ideally what you would think is that more US dollar, crude become cheaper, foreign goods become cheaper. Okay, let me tell it to you again. So US did a quantitative easing, a big quantitative easing. So US increased the money supply in their market. They decreased the interest rate. Everybody's US has taken loan and they want to invest money somewhere. So they decided that okay, let's move to India. India is an emerging country, stable country, democracy, good politicians hopefully in the future. So they decided that okay, let's invest in India. Now all of them started pumping US dollar in India. Now if the government don't do anything, then the exchange rate would take the value to like 45 from 55, because US dollar is abundant in the market. They are selling dollar, they are buying rupees. So US dollar would depreciate, right? Everybody has come with a US dollar from US and they said I want to give you US dollar, give me INR in the market. Then US dollar would depreciate and Indian currency would appreciate. You get this point? Everything is clear to this point? From quantitative easing to depreciation of US dollar. Pranav, was this point clear? How would quantitative easing affect in the normal term? Everybody would bring their money in India. Dollar is abundant. Everybody is investing in India. Indian reserves have increased. Okay. Now the government does not want Indian currency to appreciate in such a rapid way such that it hits our export. So the government comes into play and the government says that okay, today's rate is 54. We won't allow that rate to go to 45 in just 1 month or 1 week or just 6 months. We want to make it slow and we want to curb it down to 50 rupees, because beyond that our export industry will get destroyed, our outsourcing industry, manufacturing industry. So okay, we'll allow the US dollar to depreciate and India currency to appreciate, but we won't do that beyond one limit. but US dollar still keeps coming in the system. So the government will say that, okay, we'll print money and we'll give it to you, so that you don't go to the market and buy rupees from the market, which would in turn cause a huge appreciation in Indian rupees and hurt our exports. So the government will print this extra money and they'll give it to the US guys who have US dollar, and suddenly US guys have all the rupees in their hand, partly from the market, partly from the government. And they'll try to invest all that Indian currency, they'll buy houses, they'll try to hire people. So inflation would jump up, real estate prices would jump up because they'll buy new lands to do business. So the normal idea that we had, that US dollar is good for the country, but if it happens in a very fast way, an uncontrolled way, it will cause inflation in India, because suddenly everybody in US has Indian rupees in their hand and they're trying to buy people, they're trying to buy land, they're trying to hire people. So the quantitative easing has ultimately resulted in the inflation in India. But the similar scenario, what other people might talk in the normal case, would be that if US dollar, if the government does not do anything, if they allow the Indian rupee to appreciate to levels such as 40 or 42, that would mean that our export industries would be hit, Infosys would be hit, Genpact would be hit, all other exports would be hit, and it would happen in such a fast way that they won't understand how to take their business from that point. So, but if the government allows them to hit, crude will become cheaper, US goods would become cheaper, your mobile, computers, oil, gas would become cheaper, but that would hit the export. So the government needs to give all these things a right pace to happen, so that these export companies get the right time to adjust their business model, to buy the hedges in the market and to understand the market. So US quantitative easing has ultimately caused inflation in India, which is just the reverse of what we would think otherwise. Was I clear enough, Pranav, Priya, Neha, Shreya, of what actually happened? This is very different from the theoretical point of view, what we would expect from the book. Priya and Neha, do you want me to repeat? Okay, this is one news. Let's move to the other news section quickly and understand how those news will affect the pricing. So just pick any topic. Which other news would you like to see? Or which other news do you think might give you trouble in the exam? Is it news on sovereign risk? Is it news on markets? Is it news on currency? Which news do you think is daunting for you in the exam? Just let me know so that we'll move to those. Okay, Japan currency. Any other thing? Neha, Priya and Pranav? I think we had a lot of talk on currency. Let's try to move on to some other thing. Probably gold or some other thing. Okay, there's another interesting thing. Gold, oil or metals. Yeah, commodity pricing is another interesting thing. So when there is a recession, let's try to check out what commodity news are they talking about. Now in general, when there is a recession, people would buy metals because gold is a safe haven, right? That's one argument. But in recession, the price of commodities actually decreased, or they increased, or something happened. So they can ask you the reasons of why that was happened. Like, look, they talk about gold all the time. If we talk about commodities, the chances, I got a question of gold, I remember it exactly. It was like during the recession time, we expect everybody to go buy gold, so the gold would increase, but the gold was actually decreasing, the prices of gold. And they asked me reason for that. And the reason for that is that this specific recession was a recession where liquidity got hit, and that is the reason people, although interested in investing gold, were not allowed to invest in gold due to the liquidity issue for some time, for 6 months or 1 year. After that, gold increased. So what was the reason for lag, that the recession hit the market and still gold price did not increase? Things like that. They'll give you enough hints in the world to understand why that is happening. So gold see rebound, Cyprus revised gold. Now I did not track this news. Okay, so this country is causing Eurozone again in trouble. So they might have given us. I'm not aware about this news, but you should check this topic because I think it's a hot topic. I did not study it. But the effect of Eurozone crisis on gold is one topic that you should understand. Okay. Investors source gold and hedge funds cut bets on price gains amid US economy is improving. Metal is down 4% this year in London after 12 months straight gains. Okay. From deadlock. Okay. Okay, so US recovery has got slower. Sorry, the euro recovery has got slower. I think that's why people are moving towards gold. But they are saying that gold price is decreasing, maybe because of the demand or something like that. So just go through this news and that will help you to understand. I'm not aware about this news because I have not tracked this one. Okay, I think Shreya has some idea about what's happening. If you are in the same class, you can just discuss them among yourself about this recent crisis and understand how that would affect the gold and commodity. In the recession, what would happen to oil? So there are two things. In general, in the recession, okay, this is an interesting thing. In the recession, the prices of oil would decrease because people have got less money, unemployment is high, and they don't want to buy anything, right? So commodity prices in the recession would be hit due to consumer demand. But suddenly you would see that this thing did not happen, and one might reason for that would be war at that time. So if there is a war in Middle East, the oil prices would still not decrease because oil increases the risk of energy from that area. So these are the reasons. So if you just think it on the basis of recession and you take a position, then things would increase. That's why a news on Iran would have an effect on many of the pricing of various instruments. Okay, are you getting my point, Pranav? Yeah, Neha? That it's a multi-factor thing. The news would change the pricing. Okay, any other thing that you would like to talk on in the news before we move to the next part? Have you guys studied investment banking? Because there is a separate section of investment banking in that. The effect of price to earning multiple when one company acquire other, what price they would pay, what would happen if they pay more price, the price of acquire or the acquisition would increase and decrease depending on which factors. Have you studied those things? It's in corporate finance CFA level 2 as far as I know. That's an independent section, so just be careful on that. So we have 2-3 options from here. We can move to analytical reasoning. We can move to investment banking. We can move to other things as well. We can move to portfolio management, or we can move to some news or fixed income, or understanding some instruments of fixed income. So which thing would you like to move from here? Shreya, Pranav, Priyen, Neha. Just give me which thing would you like to see now. We have topics like investment banking, analytical reasoning. Okay, one for analytical, one for investment. Okay. I think so. The deciding vote is being left to. We have got 3 votes. Priyan has replied. I think Priyan has the deciding vote. Priyan, shall we go for analytical reasoning or investment banking? Okay, let's move to investment banking and then we'll move on to analytical reasoning. Analytical reasoning is same as CAT exam, if you might have given that exam before. So those things are like that. Are you giving CF level to anybody this time? I was told that people are giving CFA level 2 in the batch. Okay, if you are not giving CFA, this investment banking section becomes very important for you. Because you can still do analytical reasoning from the book. I think Sarvesh Kumar is the book of TMH. This investment banking would become tricky to understand alone. Okay, few things that we look at. We have investment banks and we have commercial banks. So investment banks again can be divided into 2 parts. One which do all those things like merger acquisition, IPO, raising debt. Another is the trading desk of the investment bank, which sells CDS, MBS and things like that. So commercial bank, investment bank, 2 different aspects. So the typical investment bank that we know is about raising money, IPO, merger acquisition, giving debts. And the other is the trading part of the investment bank. I think this is theoretical. Okay, for mergers and acquisition, we use a few things which are very important. Like we use EBITDA. Theoretical things you can do. Okay, before that, let's look at this. So these are the 4 options for excess cash. We can buy our shares back, we can provide dividends, we can repay debt, we can do nothing. Interestingly, you might know a little bit about all of them, but why not repay debt? Repay debt is the last option that we'll do. And when to repay debt and when to not repay debt? Can you give me some hint on that? when would I repay debt and when would I not repay debt? This is not talked in any exam. This is real life scenario what companies would do. Pranav, Priyen, Neha, Shreya, what's the problem with repaying or not repaying debt? Okay, repaying debt, but no company repay debts ever. So interest rates are very low. Why to repay debt? Not repaying debt actually increases our leverage and returns and increases the return on equity. So the only reason why we would not repay debt is that we have some triggers of the rating agency. Most of them are EV by EBITDA triggers and interest coverage ratio triggers and cash flow triggers. So suppose they say that okay, you can if your debt is like between 0.4 to 0.6 of your total capitalization, means if you are a 100 billion company and you are between the range of 40 to 60 billion, we'll give you AAA rated. If you're out of your 100 billion, if it's 60 to 70, we'll rate you AAA. So we see all these corridors of debt to equity, corridors of interest coverage ratio, corridors of enterprise value by EBITDA multiples. And if we are safe in the corridor, we'll not repay debt. Because if you are suppose at 55% and even after repaying debt you move to 44%, but your rating is not increasing because the next trigger is at 40%, it does not make any sense repaying debt. So if you repay debt, debt becomes cheaper for you. If you don't repay debt, it's slightly expensive. So it all depends on rating and the cost of future debt that you are going to take. So repaying debt is a typical scenario. It's not like you should never repay debt. It's not like you should always repay debt. It all depends on the corridors in which you are landing on various parameters and how that parameter will affect the cost of your revolver, which is the short-term loan and the long-term loan or a bond. So if you are interested in writing a bond, then you should, and if the corridor is near, like your debt to equity is 50% and the rating agencies have an algorithm that says that 35 to 45% of debt out of the total capitalization will rate it AAA, and you are lying at 49 or 50 and you said, okay, if I pay 5% that I land in a AAA corridor and that would help me to get cheaper loans in the future, or that would help me in launching more bonds. So that all depends on your strategy. Okay, is this thing clear? Why to repay, why not to repay, and how to decide whether to repay or not? Am I going faster? Just let me know if you want to slow things down. The problem is that they gave me only 3 hours, so I have to cover a lot of things. I have to cover my 20-hour course in just 3 hours. Pranav, Neha, Shreya, any doubts about repayment of debt issue? Okay. Share buyback is one of the most interesting thing. So with an excess cash, you will buy share of your own company. Why not pay dividends? Why not repay debt? Or why not keep the money with you? Share buyback is the best option out of all four, unless you are looking for a rating trigger to be increased. So share buyback is easier because you save double taxation. Share buyback is easier because your price of share will increase because your number of shares outstanding will decrease, so your EPS will increase, your EV by EBITDA multiple would increase. Share buyback is the best thing to increase the share price for an investor, which he can then sell and take profits anytime. Yes, there are many reasons. So a company would do all these things, or it would do one of them depending on what it wants to do. I'll quickly move to a numerical that you are going to see in the exam for sure. So that would make it easy for me. Okay, just try to look at this numerical. A kind of this numerical is for sure in the exam. Either it will be of an IPO or a merger acquisition. Oops, sorry. So we have company A and company B. They have their earnings. They have shares outstanding, earning per share, price per share in the market, price to earning ratio. Can you tell me which of the following depends on supply demand, and which of the following depends on things that are arbitrage? Which of the following is the most controversial element of this screen of all of the five, which makes our analysis very difficult? Or which, if you understand one out of these five. Okay, P by E. Any other guess? Okay, P by its limitation, but everything starts from the price, because price can move anytime, and your price is not always right in terms of your P by E ratio. So company will have a very good P by E ratio, but still the price would not reflect that. So just a quick question, a one-liner question that you will get in that. If there is a company in India which is a very good company of telecom, and if there is a very good telecom company in US, both operating in their own respective countries, which of them will have low P by E? Which of them will have high P by E? So one is the emerging market country, a good emerging market country in India, say suppose Airtel, and then you have a company in US. I think it's Verizon or whatever. Indian low P by E, okay. Neha, your answer. And who else is with us? Pranav and Priyen, what's your answer? Okay, India low by, if both of the companies are earning same, then whose price would be more? Look at it this way and you'll get the answer. If both companies are earning same, whose price will be more? Which of both companies is expected to grow faster? Which of them have like wild plants? Oh, is it US or is it India? That's the first element of the CFA exam, that invest all of the money in emerging market. US market is saturated. We don't have growth. US GDP is, I think, 2.5%. US GDP was in recession for the last 4 years. US consumers are not having money. US consumers are the same. The number are not increasing. Which of them is going to increase faster? So in any case, Indian companies are going to have a high P by E, because their price has that growth factor implied in their pricing. So they have an 8% growth factor implied. Earning of both are same. Say suppose 100 million they are earning, but US 100 million is not going to go, because in US the population is constant, the people who have money is constant. In India, we are trying to bring out people from below poverty line. We are trying to stimulate them. We are trying to bring more people to middle class. So 100 million in India earning will increase a lot faster than 100 million earning in US. So Indian company will always have a high P by E. What was the reason of you saying high P by E for US? If you can let me know, we can talk a little bit about that as well. So growth affects P by E, the takeaway point. So if you cannot just say that since P by E is high, the company is overvalued. The second most important thing that you should look after P by E is growth. Okay, is this thing clear? In terms of currency being higher than ours, how would that affect? Both of the companies are working in their own places, so all things are constant. They'll sell, US companies sell phones and give connection to US people. Indian company will. Currently telecom is bad in India, but I still think that it will grow faster than in US. But I'm talking about P by E. if you assume even a 6% or an 8% growth of telecom, that's good enough. By bad we mean that it's not 20 or 15%, it has come down to 8% growth. Still, if you go and observe the PY of these companies, it will be much higher than US companies, because we have positive growth and US companies have near zero growth. Okay, so PY becomes a very interesting thing. Now let's move back to our question. Now since we had talk about PYE, let's look at what's happening here. Company A will acquire company B with shares. So first of all, which company do you think is growing faster and which is overvalued, in other words? And in general, do a mature company acquire a small growing company, or do a small growing company acquire a mature big company? So that's quite simple. A small growing company cannot acquire a big company. So generally, just remember this thing as well. You might get a question on this, that a company which is stable, a company which is having a lot of cash, don't know where to invest it. So company with low P/E will hire a company with high P/E because it wants to absorb that growth. Okay, so company A will acquire company B with shares of common stock. So what would this mean? Okay. So company B has agreed to pay $35 in common stock, $35 per stock. So they'll give you stock equivalent to $35. Okay, so it's a buy shares. So they have decided on an exchange ratio of 0.485. New shares created is 0.5468 into 2 million, which is the number of shares outstanding. So total new shares created, the new and the old share becomes this new share created plus the old share they were having. This is the total earning. And this has affected the price to earning ratio of the combined entity. Let me repeat it quickly for you. Company A is acquiring company B. Company A is the bigger company, company B is the smaller company. In general, companies don't acquire companies with low P/E because I told you the reason, but the book took it this way. So they have agreed to pay an offer of $35 in common stock. So they'll give you stock. This is just a medium of exchange. So they'll give you 0.54 stock of company A. This is what they are giving to you. So new stock in creation is 1.193,000. The total stock shares outstanding is 5 million plus 1 million, 6 million. The total earning is the earning of both the entities, and the earning per share has become 4.10. Now just observe, this earning per share has increased, right? Can you tell me why this has increased and how EPS would get affected on the exchange ratio? Just think on this one. This is the only tricky point in the questions of merger acquisition. Once you get this, life from here will be very easy. Let me repeat it for you. Company A with an earning of 20 million acquired company B with an earning of 5 million. EPS of company A was 4, EPS of company B was 2.5. Stock prices were 64 and 30. Company had decided to pay $35 in common stock, or in other words 0.54 stocks of their company, which resulted in an ending EPS of 4.10. So why did EPS increase? And when would EPS increase and when would EPS decrease is my question before I give my explanation on this point. Any answers? Have you studied this before? How to decide an optimum price during merger and acquisition? The effect of EPS, choosing the right EV by EBITDA multiple. Neha, Shreya, Pranav, are you with me? Were you able to get this question of what's actually happening? Priyan, and who else is with us? Let me know if you want a repetition. I can repeat this for you. Pratik, are you with us? In case you don't understand any of these things, Pratik, please let me know. Just type a message to me and I can repeat that. Pranav, Neha, Priyan, Shreya, were you able to get this question or was it too much difficult? Okay. Neha, Shreya, Pri, and who else is with us? Okay, do you want me to repeat this one? Just let me know. I can repeat this one. That's not a problem. But please type something. Do you want a repetition? Yes, no? Okay, I'll repeat it for you. Any other person wants a repetition? Okay, let's try to repeat it. Just be with me. There are two companies, A and B. Now if you want to buy some other company, you have to pay them more money. That's quite obvious. There's the price that they are traded is 30 in the market. If you give them anything more than 30, they'll come to you. Otherwise, they won't let you buy their company, right? Is this point clear? We have to give them more money. That's the first concept of investment banking. More money due to synergies, more money due to whatever, but we have to give them more money. So we decided to give them shares, an equivalent shares of $35. We are not giving them money, but we say that okay, if you sell your share today at $30, you'll get half of our shares. We'll give you a little more than half of our shares, which are trading at 64. So we'll give you more shares of our company. So we'll not give you 0.5 shares, but we'll give you 0.54 shares of our company, a little higher, an equivalent value of $35. So this is what we agreed for. So we met them, we say that okay, your stock is trading at 30, we are going to give you 35, allow us to buy your company. You are already getting $5 on your each share directly, instantaneously, plus our company is bigger, safer, whatever the reasons are. Okay, now how to proceed? This was the exchange ratio. How many shares would we have to issue? Yes, this includes the acquisition premium. So we have to pay them more money. So we are not giving them 0.5 shares, we are giving them 0.54. So for the 2 million shares of the old company, which is not into existence right now, that company is no more into existence, that's a part of our company. Now we have to give them shares of our company now on the decided ratio. So we gave them 1 million shares of our company, of the bigger company that we own. Is this clear till this point? Why 1 million? Oh, okay. Is it clear to all? I did not talk about increase earning. We are still yet to decide on that. First, we are talking about the numbers of shares that we have to create, because we have to give them more shares than what they actually deserve, because otherwise they'll not allow us to buy their company. We have to give them premium. So ideally we would have given them shares equivalent to 35 $30, but we gave them shares equivalent to $35. So we gave them shares equivalent to $35, which was 0.54. So we issued new shares, 1 million shares, and gave it to companies which we acquired. So for each share of the old company, you get a 0.54 share of this bigger company, the mother company that now has both of them. So we gave them 1 million. Now we are going to observe what would happen now to the total earnings, shares outstanding, and EPS. Are we clear this till this point? Why 1 million? Why not more? Why not less? We cannot give less than $30. But the upper limit is interesting to decide, which we'll see in the coming slides. So we gave them 0.54 shares of the new company. So the total shares in existence are 5 million shares plus the shares that we issued. Now we own that company, so all of its earning comes into us. So the total earning of us now has become 20 million and 5 million, so which is 25 million. So this is the total earning of the combined surviving company, and this is the total number of shares. And when you divide total earning by total shares, you get EPS. So 25 million upon 6 million. That's approximately 4.1. So that's the EPS. Is it clear at this point? If you want, I can repeat it once more. I can repeat it in fact 2 times more, but just let me know if you get it, because everything is linked that we are going to see in the next slides. Do you want me to repeat once more? Yes, original number of shares were 5 million of the parent company and 2 million of the company that we are acquiring. So originally there were 7 million shares, 5 million of one and 2 million of the other. But since we are acquiring the other company, we are giving them our shares, which is better shares, A quality shares. Our company is very good. Its share price is also high, $64. So we are going to give them shares of our company now, which is 1 million approximately. So we issued them share, we gave it to them. So what would they negotiate? They would ask for more shares. They would say that don't give us 0.5 shares, give us 0.6 shares, give us 0.7 shares, give us 1 share of your company. But we would say that how can we do that? Your old share price was 34. Our company was trading at 64. How can we give you 1 share of our company? Because our company is better. We are double the price of you. We cannot give you 1 share of our company. We can only give you a little bit higher. So that higher point is 0.54. You get my point about the negotiation for the exchange ratio and how that could move. So what is the minimum share exchange ratio that we can give to them? What's the minima? Neha, Priya and Shreya, what's the minima of the ratio that could go from here? Okay, so it's 30 upon 64. So they won't allow less than this. They'll say that why would I do that? Right? Okay, what would be the maxima is what we are going to search now. So our earning per share became $4, 4.1. Do you observe that our earning per share actually increased? Can you see that? It was $4. It has become $4.1. Now why did this happen? And this is the last question that will open doors to all questions of investment banking for you in the BAT exam. just think on this. Why did this happen? How can our EPS increase? In fact, that's good for us. Our EPS has increased. Our stock price is going to increase. Our company A shareholders are happy. Yes, we are combining the other companies. Can you be more specific? Or a rule that you can state out of that if this happened, our EPS would increase? And what is the point when that would touch 4.0? Or what that's a deadline for us. We cannot let our EPS fall down beyond 4. Otherwise our investors would say, what are you doing? Don't decrease the EPS. Just increase it by doing merger acquisition. Yes, so the effective yield of that company was very less. So we have price to earning ratio, and the reverse of that is yield. So for every dollar invested in company B, we were getting a yield of 1 by 12. And we were getting a yield of 1 by 16 in company A. So for each dollar invested in A, we were getting huge, better money, better yield. Or in other words, if you invest $30 in company B, you get $2.5. Whereas if you invest 64, which is more than double, just look here, the price 30 and 64. If you invest $30 in company B, you get 2.5. If you invest more than double of that money, you get just 4. Had you invested all that money here, then you would have got 5. So we are buying a company whose yield is high or whose price to earning ratio is low. Okay, is this thing clear? Yes. So what is the deadline for us? The price that which is like we won't move beyond them. The 4 EPS thing. What's that ratio or that price? Yes, A is overvalued, but you can say that. You know, it's like an Indian big company is buying a small company in US, like Genpact buy many small companies in US, TCS buy many small companies in US. So we are a big company, but we are overvalued. Maybe we are growing faster, and we are buying small companies outside India that's growing smaller, something like that. So you can say that A is overvalued. So give me a number that is our deadline. You gave me a number which was their deadline, which was 30 by 64. What's the number that's our deadline? That we won't pay you more than this number. Can you calculate that for me? Just let me know if you want to move back and forth in the screen. So my number would be 4 EPS. So one way in algebraically is 25 upon whatever the new share is should be equal to 4. So new shares is 25 million upon 4. Can you do that for me? 25 million upon 4 would be 6 4s are 24, around 6.25. So 6.25 is, oh, did I do something wrong here? No, 6.25 is the total number of shares. So we can give them 1.25 billion share, but we are giving them just 1.093. So that's a cutoff for us, that we cannot give you more than 1.25 millions of share. Currently we are giving them 1.093 so that our EPS is high. Do you get this? Neha, Shreya, Rian, who else is with us? You get the point of the deadline from our perspective? Okay. So B's perspective was that we are not going to, okay, A's perspective is that we are not going to let our EPS decrease. So our EPS is 4 and we will not let that decrease less than 4. So we are going to issue you shares, but the number would be such that 25 million upon the total number of shares that we are giving to you would be equal to 4. We are not going to let our EPS decrease. So that's the max number of shares that we can give to you. So 25 million upon total number of shares, which is our shares, and the new shares that we are going to give to you is 4. Did you get this point? Priyan and Shreya, did you get this point? Okay, so that is 25 million upon 4, which is 6.25. So we have already 5 million for us, so we can only give you 1.25 million shares. If we give you more than 1.25 million shares, then our EPS would fall down below $4, sorry. And we cannot let that happen. We cannot let our EPS get destroyed by acquiring you. So that's all in words here. Now EPS from a reference frame of both. Another way to look at it is that in terms of PE multiple, what is the cutoff PE multiple? So currently their PE multiple is 12. So how much multiple can we give to them? Is it 13? Is it 14? How much money or how much PE multiple? Again the same thing. So we are increasing their PE multiple. We are giving them a better shot. Is this thing clear? What's happening? How EPS is getting affected? Shall we move ahead? Shreya, was this clear? Do you want me to repeat? Any clarifications needed, Shreya? Just let me know if you want me to repeat this one. Any point you would like me to repeat? So what would happen if we give them more shares? Our EPS would decrease. This is what we talked about. If we give them more shares, or if we keep the exchange ratio as $45, we create more shares. By doing that, our EPS decreases. Okay, an interesting thing to note here is that we are always going to pay them more money. If we don't pay them more, they will never come with us. So deciding that cutoff of how much we can pay depend on many things. So interestingly, if you note, even if our EPS goes down, even if our EPS goes to 3.5, what would our price be in the market if everything remains constant? If our EPS is 3 due to acquiring a company, what's the price of our stock now? Neha, Priyan and Shreya, just let me know if you get this. Our EPS has become 3, or if the company A has an EPS of 3 and the price to earning ratio of 16, what would its price be? Okay, if you did not get anything what I said in the last 10 minutes, that's no worries. You can start afresh. So revive your energy. Okay, so it would be 48. But that would not happen. And the reason for that is that the market knows that if you have done something smart, your prices are although affected by your multiple, but okay, no worries. So the market knows that, so the price to earning multiple will not affect your share prices, but in fact your price to earning multiple would change. Okay, if you keep price to earning multiple constant, then your price would decrease. But in reality, your price to earning multiple would change and your price will remain constant. So just be careful about those parts. Just think intuitively what would happen. So price to earning ratio is just a multiple. It is different for different companies. During our analysis, when we get different price to earning ratios, we look at fundamental things like growth or any adjustments. Like for example, if a company has done some major restructuring, or it has sold some of its business, or suppose there was a fire or something, there was a recession or something, then the price to earning ratio moves ups and down. So that's just a subjective way of looking at it. Okay, I think that would do it for this question. Most of the question that you are going to get will be similar to this. Okay, so which thing shall we do now? I have a lot of things. I can move back to economics. I can talk equity research. I can talk portfolio management, fixed income, and I can talk on the analytical reasoning as well. So which thing would you like to see now? We'll go as per voting. Let me try to use the vote window if I can. Oh, they're not allowing me to create a custom vote. Anyways, just let me know which thing shall we do now, and we'll move to that specific area. Would you like to see more on equity or economics or analytical reasoning or portfolio or fixed income? I think the only thing that you would not have seen in recent past is analytical reasoning. All other things you might have covered a little bit. Analytical reasoning, okay, Priyan and Neha. I'm not able to create, okay. So let's move to analytical reasoning. Okay, analytical reasoning for this exam is very similar to the one that we get in the CAT. Most of the time it's about the questions where they say that there are 6 people, they give 6 professions, they give 6 cities, and they ask you to arrange them. Have you done those questions before? Or they might say that people, okay, then we'll do a few of them right now. Rian and Shreya, have you done those type of questions where they say that A, B, C, D, E are 6 people? No, it's not permutation combination, it's about drawing that table. So they say that A, B, C, D, E are 5 people. One is financial analyst, other is doctor, other is engineer. Then the one who is financial analyst live in Mumbai. The one who is an engineer lives in Bangalore. The one who is this, then they'll ask you that give us the right work, like who is engineer out of A, B, C, and E. So they give you various data and they ask you to arrange those data. So in these type of questions, you have to start with a table. So if they have given you like people, profession, and cities, then make a table and write your data near the table. Let me give you a brief idea about how to do that. So if you create a table like this, so this is the profession, sorry, this is the name, this is the profession, and this is the city. So name, profession, city, 3 columns. Now if they say that, if they have given you the name, then find something that you can fill completely. If they have given you the name, then write the names. Now table making is a very important thing here, because when you make table, you have to write information here. So if they say that the one who is an engineer lives in a place, now you're not given with the name, so you have to make them. Engineer lives in Bangalore. Let me change the color of the pencil. Okay, so engineer lives in Bangalore. Now we don't know which of these are engineers. We have to place it, so we have kept it here. But they'll give you A is living in Mumbai. They'll give you that C is a financial analyst. So when you keep on filling it and you keep the data on the left and the right, finally you will get a place where you will have both of them as blank, and you can fit this here. So it's all about table making. Oh, how to erase this? Erase all drawing. Okay. So you will have clues, you will have tables, you have to fill in the table, so you have to very carefully write things near the table such that you can fit it when you get a chance. Fill in the most easy entry first. Don't try to fill in the entries which are given in order. Read the condition carefully. Your starting point would be the key here. So starting point is the key. Picking the right information first. Whichever information fits in the table, just remove them. And whichever information which is given to you which is not in the table, just write it down somewhere near the table on the same screen. So it's all about making table. Let's try to make this table. It's a very simpler question. In the real exam you will get a tough question, but this will help you. So they say that 6 person A, B, C, D, E, F are sitting in 2 rows, 3 in each. E is not at the end of any row. D is second to the, just hold on, second, okay, is not in the end of row. D is second to left of F. C is neighbor of E, is sitting diagonally opposite to D. B is in the neighbor of F. Just try to make a table out of this one. Choose the right starting point. If there is a pair, just try to write that pair nearby and use it appropriately. I'll show you the table before we talk about the solution here, but I want you to try this one. Do you have a pen, paper nearby? Yes, no? Okay, Priyan. Oh, that's great. Make the table right. Pick the first entry carefully. Which first entry is going to give you the break? If some information you read and it's not getting fitted, write that near the table. Okay. Neha has the answer with us. I'm waiting for Priyan and Shreya. It's all about picking the right things first. And it's all about converting those lines into some marks near the table that will help you fit things. So if they say diagonally, then draw an arrow diagonal and keep elements there near the table so that you can move that thing inside. So making tables, getting the right entry, making the right symbols. So you can make a symbol for diagonal thing and you can keep that near the table such that you can move it into table whenever required. Marking things like not D, that D cannot be here. So if they say that D cannot sit on any corner, so you have got 4 corners. You can write on those corners not D, not D, not D, not D. So you have like 4 entries made up of that thing, and that thing has now turned, you have turned that information from words into table. So you have to convert all the information into the words into the table. If you are not able to convert that into the table, keep it outside the table but close enough so that you can move that information inside the table. It's all about table making. Priya and Shreya, any breakthroughs? Don't start with the toughest part of the question, start with the easiest part of the question. Okay, that's great. Priya and Shreya, are you facing any problems? So E is not at the end. A, B, C, D, E, F, not E, not E. This brings your information inside the table. D is second to the left. Oh, how is D, B, F? So this information you have put it here, but you don't know where to fit in. C is in the neighbor of E and sitting diagonally opposite to D. So C is in the neighbor of E and sitting diagonally opposite to D. So neighbor of E means C could be and diagonally opposite to D. B is in the neighbor of F. So when you combine all these informations, you can make the table. If C is in the neighbor of E and E cannot be in the end, and C and D are diagonally opposite, which means that they are at the either extremes. So that gives breakthrough in the question. And when you write D and C are diagonally opposite, you can have diagonally opposite C and D here also. C and D or D and C. But you cannot have E on the extreme right. We already marked this thing. So the only way in which C and D could go diagonally opposite is being at extreme ends. If you put C and D here on the blank spaces, and you cannot put E on the either side, so which means that E is here and CED is not the combination because it does not satisfy the other condition. So we are trying to bring every information into the words into a tabular format by either marking as not E by either taking something as this and keeping it here close to the table. So we are keeping things close into the table such that we can move it into the table. At the same time, we are trying to look for the easiest part to break in. Okay, I think the trickier part here was C and D being diagonally opposite, which was also the breakthrough. Diagonally opposite means either it would be last on both sides or the second last from both sides, second and second last. So that gives you a hint to break into the question. You need a little bit of practice here to understand the words they are using. Priyan and Shreya, was this clear? I know if you are doing it the first time it might be a little bit difficult, but just write these points with you. Point 1, try to bring everything into the table. Point 2, look for a breakthrough which is easiest. Point 3, once you mark all those things which are into the table, just cancel those lines. When you start doing that, it will become easier. It's about table making, so you'll get it after some time. Okay, if that the last one was unclear, let's try this. A, B, C, D, E, F are sitting in a circular. E is to the left of D, C is between A and B, F is between E and A. Try this carefully. Try to bring in the right information first. If C is between A and B, it's ABC, somewhere like that, which has to be fit into the C. If F is between A and B, E and A, sorry, so it's EFA or AEF. But we know that C is between A and B, so the starting point of this question would be 3 or 4, not the second. So we have to look for a starting point, so we have to first draw a blank table. Then we have to mark these constraints that E and D are together, A, C, B are together, E, F, A are together, and try to fit all these things into a circular table. This is easier than the last one. Are you getting this one, Shreya, Neha, Priyan? Any issues with this one? Are you comfortable with me stretching for another 20 minutes? Just don't go without leaving because I need your feedback. So let me know if you're comfortable to be here for another 30 minutes. If you want to leave, let me know beforehand. Would it be fine if we are here till 7? Anybody wants to leave early? Shreya and Neha, do you want to leave now early or are you comfortable being here till 7? Any other appointments? Okay, so Shreya can be here, Priyan can be here. Neha, are you fine with 7 p.m. or you want to leave early? Part 2 depends on your feedback, so I don't know. I have asked for 6 hours. I'm not informed about the part 2. I'll give you some assignment and some links. So let me just do this question and I'll give you something about my agenda for the next class and then we'll end this session. I'm not confirmed for the part 2. Depends on your feedback and availability and other things. Were you able to get this one? This was easy. What happened? Count till 7. A, B, C, D, E, F. Okay, continue till 7. Okay, let me show you how to study for that from my modules that I made. That would be helpful. I have made a blog entry of the exam, and I have made some videos on YouTube. So if you search for Bloomberg assessment test, space blog, this is my blog, which is stockcreditfinance.blogspot.com. This is the things that we are doing. This is some points that you should keep in mind. This is the course that I requested, 6 hours, 2-day course, but I got only 1 for now. These are some free recordings on Vizik.com that you can check out. All of this is free. If they don't work, let me know. And this is my videos. I have made around 8 videos on YouTube. So there are videos on fixed income, portfolio, equity. You can check out these videos. Okay, so that was about my blog. You can check out, I have around 7 videos, so that would be around 1.5 hours of recording. You can check out those as well. Oh, were you able to see my blog? I don't know if it worked fine. Yes, no? No, yes. Okay, Google Bloomberg assessment test space blog. My blog is stockcreditfinance.cfa.blogspot.com. Okay, that's great. So were you able to do this question? Need any clarifications on this? Oops. It's a circular thing, so you can start with A, F, E, D, B, C. Yeah, that's right. The reference frame could be any. Yes, this is also right. C, A, F. Oh, just hold on. C, A, F, E, D, B. So just check out Shreya one more time. If you missed any information. Okay, we are good at this one. Rian, were you able to do this? Need any help? Okay, that's great. So it's all about making the table. It's all about getting the right start, dividing parts into question, and keeping things in the right way. If you do these things right, it will be fine. Whenever you bring some information from words into the table, just cancel that information. Don't let it be there. Otherwise, you'll get confused because you will not be able to bring all the information into the table. So you will be going back. So whatever information is in the table, remove that from words. So here is one solved question for you, and this is exactly the type that you'll get in BAT. Let's try to look at this one. So 3 women, and just remember that they are going to give you first name difference. So it's JML. Don't write the full name ever. So J lives in these 3 places. J lives in Southwell Park. She drives an Audi. The woman who lives in North Avenue drives a BMW. And most of the times you will not be able to get full information to make the entire table. So even if you are done it with 70%, don't go for uh, other information if you don't get it. Just use that information. In the options, you will be able to eliminate at least 2 or 3 options out of 4. So that would be good enough for you as a breaking point. So still you can get something out of it. Okay, so you can still do it without 100% information. Then we have the questions of ranking, blood relations, grouping, and a lot of other things, and some questions of Venn diagram. We don't have time to see all this, but I'll probably get this email to you. Anything that you would like to do here? Shall we do a couple of more questions? And if yes, which type? I think the chances that you will get these, okay, before that, let me show you the official content that we have from Bloomberg. Guys, so this is a sample question. I'll get you email all these things. So this is released by the Bloomberg. This was an old old exam which has less question. So used car values, this is I think from probably the chart of the day, economics question, currency depreciation, financial reporting analysis, financial statement, this is corporate valuation. I'll get you these things. This is investment banking, what we just studied, IPO, financial market. Most of the financial market is from fixed income. So I'll get you these things. Then we have the analytical reasoning, where we have questions like this. the situation. I'll get you these questions. Are we leaving any area? I don't think we are leaving any area. Yeah, that was it from my side. Just let me know if you need help on any other section. We can just jump on back to that. More analytical reasoning or more investment banking, or you want to touch fixed income, you want to touch equity analysis, advanced equity analysis. Let me know what you want to talk on for the next 20 minutes that we have. Anything that is giving you trouble? Priya and Shreya and Neha? Anything that seems daunting on what we talked till now? Yeah, one thing I wanted to talk about, that's about managing time. So if you have say suppose 100 questions and you have to do it in 120 minutes and you have 25 questions, 50 questions, 15 questions and 10 questions. It's divided into these 4 sections. Now how much time are you going to give to a section that has 50 questions? We have 100 questions, 120 minutes, and suppose these are the 4 sections, 25 questions, 50, 15 and 10. So how much time are you going? I'm talking about, yeah, so just give the questions time depending on their weightage. And out of 50 questions, you will have 25 sitters, 15 difficult, and 10 very difficult. You don't need to touch the very difficult one. Even if you get a 50-50 accuracy on this one, 50% accuracy, that's fine. Keep 100% accuracy here. Keep good enough accuracy here on 15. And don't waste your time on 10 questions. So assume 20% questions are there which you don't have to solve. You have to just use intuition and reduce them to 50-50 options, but you have to find sitters. So don't get stuck up anywhere. Just try to follow a good strategy. Don't waste time. If the time is over for a section, leave it. So first do the sitter. If time is over, forget about the tough question. Just move on to the next section because you will have easier question in all the sections. It's not like one section is easy or one section is tough. So be careful about the time you allocate. Divide the section into 3 parts: easy, tough, very tough. If you by looking at the question you think that it's very difficult kind of a thing, don't waste more than 10 seconds on that. Move to the second one and see if you can do that. So do the sitters first, leave very tough questions in the first go, and try to make it a habit to detect whether you want to do this, you want to keep it at the end, or you want to leave it. Make a habit that whenever you see a question, like for example, if you go here, oops. So if you go, if suppose any question comes in front of you, so if suppose this question is in front of you or whatever, this question comes in front of you, and if you are worried about analytical reasoning, you are not good with analytical reasoning, just leave this, move to the next question. Oh, this is a big question out of many parts, I think. So if you get this question and you think that you can do it, decide it in the next 5 seconds. So investor currently has this 40% invested in bonds. What value of bonds? So there is no negative marking, but you have to keep around 70% of accuracy. You have 4 options. So that's the catch here. You have to make the right guess. If you don't get anything, reduce it into 50-50. If I were to make a guess, the 2 options that are just double of each other, I'll make a guess out of that, and I'll move to the next question. So if I were to make a guess, although the right answer they are saying is D, I would make a guess of anything which is double of the other thing. Double of 4800 is 98600. No, I don't know. I'll probably do randomly. But if I'm investing just 10 seconds in it, that means I'm leaving this question. I'll do the best possible in 10 or 15 seconds. But if I went here and I'd say that, okay, this question I can do, then I'll invest 50 seconds and I'll try to get to the answer. So pick the right answer carefully. Don't waste your time on tough questions, because you will find very easy questions in each section of the exam. It's all about exam management. Like you have heard in Indian politics, it's about election management, nothing to do with performance. In the same way, whatever you have learned, whatever you know, if you cannot manage the exam right, if you are not picking the right questions, if you are wasting your time on tough questions, and if you are not able to attempt 100% of the exam, you are still going to lose. And the person with less knowledge than you, if he can do the easier question and strategically leave the tough question, can get more marks, because you wasted your time equally, which resulted in you being not able to attempt all of the questions. So be careful on that. Okay, is this point clear? How to manage time, dividing the questions into 3 parts, doing the sitters, leaving the very tough questions, and so on. Okay. I think that was it from my side. Just let me know if you want help on any of the other topics, and we can look at that. There is no passing percent. You'll get a percentile score that you have these many people below you. So you'll get your accuracy and percentile score. 90 percentile I think is good enough. Generally the people who are searching for resumes, they short it at 90 percentile. So that seems a good score. Any other questions, Shreya, Priyen? You can check out my YouTube videos and you can write me. I'll just give my email to you. So this is my email. I don't know if you're able to catch that. You can check out my blog. You'll get my email from there as well. Just hold on. Let me try to end this session, and probably we'll meet next week. सचिन जी सेशन एंड करना है तो किस तरह होगा? हाँ मेरा हो गया है. किस तरफ से? ये किधर लिखा? फाइल में लीव वेबिनार है ना कि एंड वेबिनार? लीव की एंड? लीव वेबिनार. ओके मैं कर रहा हूँ. Okay guys, I'm ending the webinar and I'll see you next week. Thank you.